Good morning, folks. It's Harry Swaminathan. It's July 8th, Monday, 10:30 a.m. And we're looking at our Google trade. So let's take a look at what's going on. I wasn't able to get that the 10 at the right price. So obviously I did not take it, but we have a nice positive delta and a positive gamma. So let's take a look at this position right now. Like I said, I think from previous trades, we are down about 2,000 on this trade. And today, what we're going to do, we put that the weekly option last week, and you can see that one is really up nicely. But what is troubling is the 890 call, which is, of course, getting deep in the money. Google's at 904 now. And if we just looked at these two positions, let's say the 890 and the 920, excuse me, that wasn't what I wanted to do. The 890 and the 920. So we are down about, I would say, about $7,600, $7,700 on that position. But we have a 4,800. This is, yeah, 7,800, 4,000, and we have a 4,800 profit on our weekly option. So what we can do is take another loss here, because the reason we can take this loss is because if you look at this bull put 870, 850, we've got, here on that trade, we've got, let this reset here. On that trade, we've got 13,000 left over there, and we, with only 11 days. So even if we take this loss of 3,000 over here, and then our total loss will be 5,000. We can still come up by 8,000 on this, on the bull put. Then we'll just have this 10 contract 900, 920 to worry about. So that is what I'm going to do. So let's take a look at what that looks like on the graph. Let me see here. We've got a positive delta, and what we want to do is take this off, and take this off. So now you can see if Google goes up all the way here, we don't face a loss. In fact, we have a $500 profit. Obviously, we don't, that's too little. We're going to try to maximize that. But my point is, we have all this profit zone over here. So let's do that. Let's take off these three. So I'm going to take off the 20 contract bear call, and we are also going to close this weekly. So by doing that, what we can do is we can will be providing safety to this trade, and you can see we can still make a good, 10. On this profit it'll show 10,000, but then we have to subtract 5,000 that we lost. So I think this is a much better position to manage going into 11 days. So that's what we're going to do: take off these 20 contracts as well as the weeklies. Okay, sorry, just to continue on that theme, what we're going to do also, now I've closed that and the weeklies. Now you can see that the 900, 920, which is, of course, is in a little bit of trouble because Google is at 901, but you can see that it's come down. So it actually, our move made sense, because otherwise our weeklies would have lost a lot of money. But now you can see the 900, 910. So that is losing about 3,000. So what we're going to do is we are going to roll this one over. 900, 920. We're going to roll it over to say 930, 950. So let's see what that would look like. Let's go to the Analyze tab. And this is what we have right now. Well, because the other positions are closed. So we're going to add simulated trades. Let's add simulated trades. And we go to the same July series, and let's see what the 930, 950 looks like. So 930, 950, we're going to sell a vertical. All right, and so let's change that to 950. And we're going to get a credit of $5.30. So now if we can increase it, because we've got a 30 bull put there, if we can increase it to, let's say, 20, okay, 20 contracts, we get a negative delta of 56. And if we do 30 contracts, we get a negative of 168. Now it is bullish, so let's just do 20. And this is, fairly delta neutral for Google. And so by doing this, we're going to pick up about $10,600. So we are down 5,000 on the position. Now, if we close these two, the 9, 10, 9, 20, we'll be losing another 3, but we're going to make up all of that by selling 20 contracts at the 530 level. So that's what we'll do. And so once we do that, if you look at the risk profile, now you can see that we've extended our profit zone. We've picked up a lot more credit. Our break even moves out to 935. In fact, let's say if we do 25 contracts, that might be a little better. 119, that's fine. I think 119 is fine. Or let's do this. Let's go out one more strike. So 940, 960. So this might make it even safer. We get credit of 8,400. No, I'm sorry, 25. So we'll get over $10,000 credit. And now this moves out the whole thing here. So what we are going to do here, let me take off this because that's important. I'm sorry. Yeah, now this is the real figure, but we have to now take off all the losses. So now if we did that, now we turn it into a nice iron condor. It says here our max profit zone is going to be 25,300. However, that doesn't take into consideration all these losses that we are booking. So we've already booked a $5,000 loss and we are going to book another $3,000. So 8,000. So if we take off 8,000 from this, then our real profit on this position will be about $17,000. So this is a much better position, rolling it over. So that's what I'm going to do. I'm going to close out these two over here, the 10 contract position, and open up new 25 contract position at the 940, 960 level. Thank you.